All right, welcome everyone. Welcome to the Hurley Investments Market View Commentary for the middle of May, the 16th. Glad that you're here tonight. It's Monday evening, and I've got some information I think will be pretty important to you. It just is going to go through our thought process on where we're at and why. But I always hear, Kevin, what are you doing that no one else is willing to do? And my first thing that I kind of giggle for, because it's always like, hey, if this is so good, why is no one else doing it? And usually my answer is twofold. Number one, it's a lot of dang hard work. And if a broker doesn't have to do it, he can just sucker you into going into funds, and he's going to go ahead and, hey, it's the market's fault when it's down, and he can't do anything about it. And it might be down for 13 years like last time where it was just flat. It's somewhat your fault for allowing someone to get away with that. But Michael Burry, pretty interesting. He owned 2,060 put contracts on the end of the first quarter. It was tied to his shares of stock. This is what we call the protective put strategy. This article is short and sweet. Right here in the I guess it's the fourth paragraph, right? A put options contract gives the owner the right to sell security at a certain time for a certain price, so it increases in value if the stock declines below the so-called strike price. If Burry held these put options through the current quarter, the bet would be profitable as Apple has dropped 15% in the second quarter so far. Pretty interesting that here we have a big name that's in our industry that called the big short in 2008 doing exactly what we're doing. Notice he's not in funds. He's like, hey, if you want to beat the market, you can't beat the market. He's not in a 60-40. Someone that golfed 206,000 shares. Let me get the what I'm trying to find. 206,000 shares times Apple and Apple's current price. I'm just going to say 146.01 after hours times 146.01. He's only got 30 million tied up in Apple. So let's get that undone. Let's go 16. Let's not underline it. So here we have Michael Burry, The Big Short, right? Great movie if you ever want to watch a movie. Has 206,000 shares times 146.01 after market close comes down to only 30,078,060 doing exactly what we are doing. All right, so out of curiosity, what do you think the question is? What's the biggest question I'm getting right now? Or what's the most common? Let's do it that way. What is the most common question you think I am getting right now? Because it should be kind of your thoughts as well. How much money am I going to make? And then I just had another one pop in. Why am I losing money? Are we in a bear market? So the funny thing is, yes, we are in a bear market. Yes, you're going to lose some money in a bear market as we make something on the way down. And All I'm going to say to why am I losing money? Because you don't have all your money over with me, and I'll lose a lot less for you. But it's interesting, that's actually not what I'm getting right now. What I'm getting right now is the last article I have in here. How long is this bear market going to last? Will it be a correction and will we go below 20%? And I found it interesting because I found this article and I chose not to put it on last week. It's not my job to scare you guys into keeping money with me, right? I'm not here every Monday night to preach doom and gloom. I'm just to show you what I see and what we're doing to protect against it. I did find it interesting though, and it comes right down to right here. In the last 19 bear markets, the average peak to trough decline has been 37%, with an average duration of 289 days. If history would repeat itself, then today's bear market ends in October 2022 with the S&P at 3,000. But Kevin, in 2020, we had a bear market that lasted like 60 days. It actually was a correction, hit the 20% down, came right back, which means it actually shortened the 289 average days because that one only lasted 60. If you were to ask me, it's probably a November 6th, November 7th bear market. We really could go down to 3,000. And the catalyst that will change the trend, that will change what's happening, will probably be the election, which means we could really have 2 months that our market could skyrocket. It could really skyrocket the last 2 months of this year as we play some catch up. But that means we're looking at an S&P of 3,000, and it could have a decline of 37%. So just to keep that into perspective, when people ask me how long this is going to last, and that is my number one question. Number one question. How long will the bear market last? Great answer. I don't know. Believe it or not, I don't predict the future. But the more you make on the way down, the more you make exponentially on the way up. And people that were with me in 2020, well, actually 19, if you're with me through 2019 to 20, we had some great years there. Quick downside, easy to read, coming back up. This might be a little different to read. This one might be a little harder. In fact, as Keeve and I spoke today, so Keeve and I are ready to rip protection off for a very short time until we hit the previous, and I should say the previous short-term rally highs. So we might only have them off for a week. And if we get a 6, 7, 8% up higher, we're going to put them right back on. We typically will call that a dead cat bounce. And a dead cat bounce is where you just, well, let's bring it up. We've had one already. A dead cat bounce is just this short-lived from 4,000, 3 days up to 4,300. That's a 7.5% upside bounce. Kind of scary. We have a doji. Looks like the trend is going to change and we're going to see things go back down. People asked me today, Kevin, we're bullish. Maybe we should take stuff off of Facebook and Apple, and it's time to see things go back higher. Well, the S&P tells me otherwise. The S&P today looks like big money's kind of putting stuff, pulling back. They're not putting as much in. The doji that looks like a cross, that's usually a trend reversal. We've had a 2-day uptrend. Go ahead and test that bottom, a triple bottom test. Being one test right here, one test right here, probably a triple bottom test. Wouldn't surprise me to see us go back and test 38.50. Do we know what's going to go on? We don't. I'll be the first one to tell you, when it comes to predicting the future, that's not who we are. But Steve and I spend a huge amount of time going over it, discussing it, looking at individual stocks, running our numbers. If you want to go back to myhurleyinvestment.com and go through our January 10th numbers, as of right now, all of those numbers are still intact. All of those possible end of the year 24-month numbers, they're still intact and they're still ready to go. So expectation is pretty sweet. But again, it might come the last 8 weeks of the month after the first week in November. It might only be 7 weeks. Our goal is to protect as well as we can on the way down to make up as much as we can on the way back up. We've had this question recently. That's probably number 2. Why aren't you doing a better job of protecting the long calls with long puts? And for those of you that we might have in what we call leap long calls, the leap long call strategy is a stock replacement strategy that mathematically it is easier, simpler, and more profitable to dollar cost average than use puts. That doesn't mean it always works. So my next question that I get, and it's probably number 3, so if the stock replacement strategy doesn't always work, what do you do, right? And that's also pretty simple. We condense and roll farther out in time to allow the markets to come back. So it all seems pretty simple, right? Well, you can just work some rules and off you go. The one thing to understand, and it's probably the most important thing to understand, the stock market is like a adolescent teenager. And having a couple of those right now, it means doesn't do what it is. So I can't read some of those comments that just came in. Doesn't do what it's supposed to. Won't follow directions. And thinks it knows it all already. So that's what we're doing. That's what we're doing. That's what we deal with, and we do the best we can, again, knowing that anything we make up on the way down is a profit as things come back up. And the exponential side of things are when you get more shares of stock, it moves up significantly. We've already had one day this year where we had like a 2%, 2.25% on the S&P, yet we had some accounts that were up between 5 and 7.5%. That happens when one stock like Baidu goes up $22, when Disney goes up $9, when Apple goes up $11. That's what happens. The neat thing is for Under Armour, Ford, some of these smaller ones, they only have to go up a couple dollars in smaller accounts. When you've doubled your share count, it comes back twice as fast. The key to remember and the secret for plain and simple English, the secret to your success, what do you think it is? What do you think the secret of the success is? I think it can narrow it down. Okay, so I like that one. Justin, you just became my new favorite person. Justin says, secret of your success is use Hurley Investments. I like it. What's the secret though? I give it to Jim Kohler. Kohler, you hit it on the head. Patience. Let me throw some comments on patience. Patience, it's damn hard in a bearish moving market. If I can make another couple comments about patience, and this comes from me and my personal trading, because Keeve and I have our own money doing exactly the same thing we're doing for you. Patience. It's really stupid sometimes. Patience hurts. Patience sucks when your wife asks, how, and I might as well just put it, how are we doing in the market? Right? If you don't have the experience to see these things come back, if you don't have the experience for collar trading and been on the other side, the hardest part of patience, and I'm gonna say it's my part, hardest part of patience is not giving up when everything goes on sale. I'll tell you, before I started trading this way, I had another 10 years where patience was my worst enemy. I had nothing to make up anything on the way down. I hated seeing my big runs up disappearing as it came back down. I hated having to find more money to put into my account to dollar cost average. I hated being in mutual funds with costs of 3.5 to 9 to 10, 11%. Patience sucks. It is difficult at times. Until you have the experience on the other side and see things work pretty well, the process is hard work. As I'm looking here, I've got Maud that's had a portfolio double. Mike Schultz is here today. Gupta's here today. Why don't I pick on you three? You've been through the process a couple times. Rich, I think you've had a portfolio double. What comments would you make on the process? What comments would you make on the process of collar trading? And you guys are all able to hear me still, right? You guys are all able to hear me? My audio is coming through. You guys are good to hear? Good. Okay, so for you three, would you take a second? Would you just give some comments about the process for those of you that have had some success with it? What would you tell this group of people? So, and if it's okay with you, I'm going to give you guys the credit here because it's not me. Rich, it comes back fast when it comes around. Thank you, Rich. Maud. There we go. So Maud made the comment. I remember I first started. So I remember, actually, why don't I just cut and paste it? Because it won't let me cut and paste it. I remember when I first started, I did not make any money for a couple of years. And I'm going to write this word for word. Patience. I did not bug you. Let you do your thing, and it really paid off. Thank you, Marco. And Dr. Gupta, thank you. Make money in both directions. And that is particularly true in collar trades. And Justin, I didn't ask you to put anything, but I'm going to go ahead. I'm going to write yours in as well. Collar trading is the only way to not lose everything. And when it comes full circle, you make a killing. And you have in there 400% in 7 years. Which I would agree in. I would agree. So for those 4 of you that participated, thank you very much. Mike Saltz, if you are thinking about something to say or don't want to say anything, I'll pretend that I just haven't seen your stuff yet. All right, so looking forward, and it's just our thought process. Looking forward, and this goes for Keeve and I believe he is here today. Hopefully Keeve can hear me. Looking forward, Keeve and I are getting ready for a dead cat bounce to take protection off for as little as a couple of days and then put it right back on to protect again. Target 3,000 and a return to break even for the year with an election stimulus. I know I'm not spelling right, but I'm doing what I can. That's kind of where we're sitting right now. And that's what we're trying to do to that's what we're trying to do for portfolios. It's what we're doing with our own, and it's what we're doing with others. So that's the goal with everything that we want to do. All right, let me go through some more information that I have here for you. And it's not all so negative. Michael Burry, The Big Short, go through and read this. He's doing what we're doing, and he's doing it with only $30 million in Apple, not to mention some other pieces. Baidu has their earnings coming up. Well, I'm pretty sure it's Wednesday. Baidu and Target have earnings on Wednesday, which I'm just going to make a comment here. The next 3 weeks of earnings are retail companies. Very important. Why would retail be very important? Why is retail so important? I want you guys to think about this. Why would retail earnings be so important? Yes, I may, Dave, let me reschedule that, restate that just a little bit. It will give us an idea on the strength of the consumer. The strength of the consumer. And that's important because that equals GDP, right? And recession. It's going to give us an idea, which we haven't seen yet. We have yet to see it. But it'll give us an idea of where we are sitting in regards to the consumer. Or if we're going to hit that recession as the consumer starts to save money, which unfortunately is a horrible idea to do in inflationary times. But it's going to truly give us the strength, a measurement of the strength of our economy. And we'll get to see if really, if you ask me, We're going to get to see if the Fed is behind the curve yet again, which obviously I believe they are. So does Bernanke, by the way, with his comments today. But it judges our understanding of where the Fed is at. Big picture, I thought this was very interesting. In fact, it actually goes over what we just talked about. Consumer strength called into question by the stock market. And we're getting some different, I don't know, some different numbers here, right? Unemployment's low. Debts. We're up to $16 trillion that people are going into debt now. Pence, Square, Visa, Apple, anything bank related, Bank of America, JP Morgan, that's going to help. Year-over-year growth in wages and salaries is close to the highest on record. Well, that year-over-year growth is because we didn't have any growth for 2-3 years through COVID. Kind of a stupid indicator that someone that's writing an article for their slant. Consumer discretionary fund. Boy, it's tanking. Consumer discretionary down mostly because Amazon's down 33%, Tesla's down 27%. It actually doesn't matter. Consumer discretionary looks horrible across the boards. Home Depot doesn't look good. 425 down to 275. There's $150 or 35%. Best Buy being up at 140, down at 80. It just lost, wow, 40% of its value. D.H. Horton Home Builders, 110 down to 65, almost lost half its value. Domino's Pizza, 550 down to 350, lost 40% of its value almost. Carnival, 32 down to 12, lost 66% of its value. VF Corp, 85 down to 45, almost lost 50% of its value. Whirlpool, 250 down to 165, almost lost 50% of its value. General Motors, 65 to 35, almost lost 50% of its value. It is all the way across the board. Ford, 50% of its value. Under Armour, 60% of its value. Disney, 50% of its value. Bank of America, 35. JP Morgan, 40. I'm going through our core holdings as I'm thinking about what we invest in. Visa not down quite that much. Square's lost 66% of its value plus. Baidu, 75% of its value plus. Apple's holding in. Boeing from its highs, 75% of its value. In fact, I had a very interesting question come across to myself and Keeve. And let me go ahead and read this one for you. It's coming off of my phone. Great text that came in today. Will Boeing go lower? What do you think? And so I happened to answer this one. Let's see how long it took me. It came in at 12:10 my time, 23 minutes later, 12:33. So good question. Right now, the stock is less than the total amount of orders it has on the books. It shouldn't trade below $165 per share, yet it is lower. Stupid people are selling a great deal right now, and impossible to predict stupidity. To where Keith jumped on the text feed and said, well said. Where our market goes to a certain degree is based on the consumer. Will we have consumer discretionary spending in the coming months? Will rising interest rates hurt demand for big ticket items? Will Fed Chair Powell actually have a clue on what the hell he's doing? And if he really has to raise it 2 2 percentage points, full percentage points in a 6-month period of time. We are not in a 1983 crash, a 1987 crash, a ridiculous housing market. We're in, and I'm sorry if this is going to offend someone, we're an administration that we slit our own throat with our own oil. We're in administration that gave us $1.9 trillion that stoked the inflation. President Trump, that administration also kickstarted the inflation. He's to blame too. He put money out there, free cash as well. Cash isn't free. It's never free. We're in a somewhat uncertain time because of the politicians, and it's on both sides of the aisle. But right now, I wish we had more oil being produced and being pumped. I think it's kind of foolish to go through all of our strategic reserves when we don't have to. Our economy was running fine. There was no real reason for $300 a month. There was no real reason for getting our tax credits early. There was no reason for a $1.9 trillion stimulus to build America better again. You know, if you want to talk about it, look at how we're paying off the politicians. We're buying the votes. And it's now coming back to hurt us and hurt us pretty good. I found it pretty interesting on the market review. And let me just go down. The reason why I brought this in here is obviously it's going to talk about inflation. But a lot of you asked about the largest, you asked about REITs or you asked about real estate. And it just seems like a horrible time to be getting in a REIT where these new REITs that are created are at some ridiculous valuation numbers, some ridiculously high priced buildings. Simple math will tell you that if you have an overpriced commercial building, even if right now it's currently covering all of its expenses, the ratio will go upside down as it loses value moving into the future, and you're going to get a margin call or a mortgage call for more money on a commercial building that's being used for rentals. Well, just as used for business, commercial uses. People that are going in REITs right now, they don't understand the numbers. They don't understand the numbers, and it is scary. It's almost, how do I say this? It's almost like looking through Madoff's returns, and anyone that was in the industry that could see the returns, could see what he was in, it was like, there's no way he's making these returns. The numbers were coming nowhere close to adding up what he was saying he was making his returns on. The REITs, it's the same thing. Real estate right now, it's the same thing, whether it's commercial or residential. It doesn't make sense that you're going to see that future growth on the way they're constructing their businesses right now. It looks awful. It just, the numbers don't add up. Okay, here we go. Moving on down. Where will the markets end? I'm going for week number 6. I'm going lower. In doing so, I'm going to just say I'm doing nothing more than following the trend. There is nothing spectacular about Kevin. How did you guess it right? It's just, I'm just following the trend. I don't see it changing this week. The Dow kind of doing the best out of 3 indexes. It's kind of funny because no one trades the Dow. It is a TV commentator's tradition to talk about the Dow, but the Dow is truly not really a tradable index. It's 31 or 36 stocks, 33, I don't even remember how much it is right now, that don't represent the country, that don't represent all of the sectors. It's kind of a joke. Yet the Dow this year, to its credit, is down the least. Down what, 13%? The S&P, bearish. Probably going to go and test those bottoms again. It would not surprise me if we went all the way down through this week. We're sitting at 4,000. We just reclaimed and held on to 4,000 today. Would not surprise me if we test that S2 level pivot point at 38.14. That is why we're choosing to keep our protection on, to roll it down and out. The NASDAQ down what, 27% at one point in time? I don't know where it's at right now. It's the worst of the 3 this year. Down day, little trend reversal. I would not surprise me to see it this week. Test that S2 support level. It's at 10,842. If we do start to see a slide, might be a good idea to start to add some short calls to make even more on the way down, or add just an extra put or two on our shares to make up a little bit more on the way down. Earnings, Home Depot and Walmart tomorrow. Lowe's, TJX, Cisco, Baidu, and Target, we're going to be paying attention to. Thursday, BJ's, Kohlers, Ross Stores, VF Corp, Alibaba, Deere, and Foot Locker on Friday. Economic reports. Tomorrow's the big day. Retail sales. If retail sales is not strong, we will see another 2 to 3% drop in the S&P 500. If the retails doesn't meet or beat the numbers, we're in for a drop tomorrow. NAHB Housing Market Index, industrial production, capitalization, business inventories. Housing starts and building permits are happening on Wednesday. We're going to see if mortgages are starting to slow those down. Existing home sales on Thursday. Same thing. We're going to see if it's going to slow it down. And we do have continuing claims on Thursday. And Friday is your monthly options expiration. I have a bunch of interesting articles. Bernanke, who's one that I followed back in the day and that I liked. Bernanke says the Fed's slow response to inflation was a mistake. Basically, a previous Fed chair is saying, you know what? You were a little slow. Which is funny because I thought he was a little slow when he was there too, right? We could have done some rate hikes 3 years ago, but we didn't. Don't take my word for it. Take a previous Fed chair and see what he says. A really interesting article. For all those poor people, gold, silver, Bitcoin, all the cryptocurrencies, when you have a strong dollar, they're just not going to move higher. well, Kevin, inflation and this and that. With all due respect, gold will probably not go to $5,000 at the end of this year. Bitcoin will probably go down to 15,000 before it bounces back up to 60 when it's sitting around 30. We're not going to be trading gold and silver ever again. There's just not enough of it. It does you no good to hold on to an ounce of gold that's going to cost $1,800 or $5,000 down the road, because no one's going to trade you or barter you for something, for a piece of gold, if it gets as bad as it, the doomsayers think it's going to be. I wouldn't sell one of my cows for $5,000 down the road. I'd rather eat than have a chunk of yellow metal. You've got to take some things into consideration when you're looking at trading those commodities. Obviously, China economic data disappoints in April as COVID controls weigh. Do read through, being the second biggest economy in the world that affects the global trade. A great article here. For those of you that maybe wondered why you still haven't gotten your paper taxes that you turned in years ago, those returns, well, we found out that the IRS decided to destroy data on 30 million filers that did a paper application and sent something in. So if you're still waiting for tax returns from 15, 16, 17, 18, 19, there may be a chance that they're never going to come. Very interesting article. I'm going to let you guys read it, because if I start talking about it, it'll be awful. I found an interesting article on 7 levels of financial freedom according to a millionaire. So this is a single person. And their view of someone that's actually made $1 million is, level 1 is to clarify your financial situation. And level 2 is self-sufficiency. And his belief is over 50% of the world here, well, that's not true, 50% of the Americans live in those 2 levels. Level 3 is they make enough money that you have breathing room. Number 4 is stability, that they've paid down their high interest cards, which is interesting because I think a lot of people that may live in level 1 or level 2, level 4, that stability of paying down those credit cards or not having them, paying them off each month. I think you could be very easily in level 1 and 2 and still be paying off your credit cards and being a level 4 stability. Level 5, flexibility. You have savings, you can kind of do what you want. And level 6 is financial independence. And level 7 is abundance of wealth, where you're trying to live off of that 4% rule that, again, still doesn't work. I just found it interesting for you guys to read through. And Apple no longer the most valuable company in the world. We probably all knew this, but there's the article on that. And household debt nears 16 trillion despite raising interest rates and inflation. Man, people are charging up their credit cards or starting new loans like it's no tomorrow. Probably most likely a significant amount of this is going to be, new cars and new appliances and those kind of things. I'm going to fall into that, as I've got to take care of new fridge, a couple ovens, washer and dryer. It's just the way things are. I left the article about if America repeats itself, the bear market is 6 months of pain ahead. I'm just going to have you guys read through that. With that said, I've used a lot of time tonight. Questions? What questions do you guys have that I can do my best to try to answer for you? And Justin, yes, you asked about that before, so let me put an answer to that. Justin, if you were to give me what fund you are in, all I'm going to do is pull up the I don't want to call it the spec sheet, the key, what's the word I'm looking for? I'm going to pull up the prospectus. And I'm going to go through the prospectus and I will show you exactly what those funds are charging you. In fact, any of you, if you have money elsewhere and you truly want to know what you're being charged, just send me an email. Let me know what some of the things that you're in. Maybe just send me your most recent brokerage statement and I'll go through and I will definitely pull up some prospectuses and show you what you're really being charged. Any questions at all? If not, guys, boy, I've kept you here 56 minutes. Let me just give another minute here, see if anything comes in, but just know Keith and I are spending every day going over positions, our core holdings. Is there a problem? Are they going out of business? Where's their free cash flow? Their debts? I mean, we're going through and spending our time making sure that we haven't put you in something that's going to go belly up. All right. Hey, I don't see anything coming in. Guys, have a wonderful evening. I will do the best I can to get this uploaded here shortly. I appreciate you being with me here tonight. Have a good evening, and I will talk to you soon. Bye-bye, everyone.